All right, come on in, grab a seat. Look, before you even think about touching a single dollar on the trading floor, we gotta talk about how the real game is played. So forget what you see on the news, and definitely forget about gut feelings. Today, we're gonna break down one of the absolute core strategies we use for income. It's called the wheel. You're gonna wanna pay attention, because this is how we print consistent returns week after week.
Okay, let's just start with the cold, hard truth of it all. This quote, it absolutely nails the reality for pretty much every retail trader out there. You're trying to win a game where the other team not only has the playbook, they have your playbook too. You're basically playing in the dark. You know what? Think of it like this. The market is just one big, high-stakes poker game. You're sitting there, staring at your two cards, trying to guess what everyone else is holding. But Wall Street, we're not guessing. We can see every single card on the table. We can even see the cards in your hand. I mean, you'd never sit down at a poker table like that, would you? Of course not. But that's what millions of people do every single day when they trade.
This massive gap, it really just boils down to three key things. First up, data. We see the huge market-moving trades before they ever hit the headlines. You guys hear about it after we've already taken our profits. Second, execution. Our systems are completely automated, running 24/7, executing trades without a shred of hesitation. And third, well, it's intelligence. We have entire floors of analysts building strategies. The average person has a gut feeling. That's the edge.
But, and this is the important part, here's where everything changes. You're not going to beat us by trying to build a bigger team or getting faster news. No way. You're going to level the playing field by using a smarter tool. This is the great equalizer. It can shrink all three of those gaps, data, execution, and intelligence, down to almost nothing.
All right, lesson one. This is non-negotiable, so listen up. Before we even whisper the word profit, we master how not to lose money. The number one rule on the floor and everywhere else is capital preservation. We protect our chips.
And the simplest, most effective tool for this is the trailing stop loss. Just think of it like an automated safety net, but it's a smart one. As your stock price goes up, the net follows you up, locking in your gains. The key is, it never ever moves down, so your profit is protected and your downside is always capped.
Let's make this super clear. Let's say you buy a stock at $100 a share. The very first thing you do is set your floor at, say, $95. Boom, done. You've just defined your maximum risk. It's $5. Now let's say the stock does well. It climbs up to 110. The system automatically, without you lifting a finger, moves your floor up to 105. Just like that, you've guaranteed yourself a $5 profit no matter what happens. You're officially playing with house money. The goal here is dead simple. Live to trade another day. That's it. When a trade goes against you, and some will, you get out with a small managed loss. You take that capital and you move on to the next opportunity. You know what really kills traders? It's not the occasional bad trade. It's one big, stupid, undisciplined loss. We don't do that here.
Okay, on to lesson two. Become the house. Now that you know how to build a fortress around your capital, it's time to put that capital to work. We're going to stop thinking like a gambler at the table and start thinking like the casino that owns the whole building.
And the way we do that is by using stock options. Now, I know what you're probably thinking. Options sound crazy complicated and risky, right? Just forget all of that. It's actually incredibly simple. Just think of it like car insurance. It's a business model you already get.
Seriously, just look at this side by side. It's the exact same business. With your car insurance, you pay a premium every month for the right to file a claim if you get in a wreck. If you drive safe all month, does the insurance company give you your money back? No way. They just keep the premium. That's their business. A stock option is the same thing. Someone pays a premium for the right to buy or sell a stock at a set price. If time runs out and they don't use that right, the person who sold it to them just keeps the premium.
And this right here is the whole secret. This is the mindset shift. The amateurs are the ones buying options. They're paying the insurance premium. The pros, we sell them. We become the insurance company. We're the ones collecting all those premiums over and over and over again.
Which finally brings us to the pro move itself, the wheel. This is where we put all the pieces together. It's a systematic, repeatable strategy designed to do one thing: generate income.
So, stage one of the wheel is beautiful. The goal is simple. Get paid to wait to buy a stock you already like at a price you actually want. Let's use Tesla. Say it's trading at $250, but you think that's a bit rich. You'd be a happy buyer at $230. So you sell something called a put option.
All that means is you're making a binding promise to buy the stock at $230 if it drops to that price. And just for making that promise, someone pays you a premium. Let's call it $500. That goes directly into your account, instantly.
Now, one of two things can happen, and check this out. They're both good outcomes for you. First, if Tesla stays above $230, the option just expires. You do absolutely nothing, and you keep the $500. Free money. Then you can just run the same play again next week. Or, scenario 2, Tesla drops below $230. Now you have to buy the shares, just like you promised. But remember that $500 premium? That lowers your cost basis, so you're not really paying $230 per share, you're paying $225. You literally got paid to buy a stock you wanted at a discount. It's a win-win. So now you own the shares. Welcome to stage 2. The goal now is to make those shares work for you, to turn them into an income source. You decide you'd be happy to sell them if the price hits $260. So you sell a covered call. It's another promise. You're just saying, if the price goes up to $260, you can buy my shares. And what happens when you make that promise? You guessed it, you collect another premium. Another $500 goes right into your pocket.
And that's the wheel. You just keep this thing spinning. You collect premium while you wait to buy the stock. Then you collect more premium while you own the stock. If your shares get sold, no big deal. You just go right back to stage 1 and start collecting premiums to buy them again. You just collect, rotate, and repeat. It's a cash flow machine.
So let's just run the numbers on one full rotation of that Tesla example. First, you made $35 a share on the stock itself because your real cost was $225 and you sold at $260. For 100 shares, that's $3,500. But wait, there's more. You also got that $500 premium for the put and another $500 for the call. That's another $1,000. Add it all up, that's a $4,500 profit on one cycle. You're getting paid from every possible angle.
Okay, I know what you're thinking. This sounds amazing. Why isn't every single person on Earth doing this? Well, this quote right here is why. The strategy itself is brilliant, but the day-to-day management of it? Oh man, it's relentless. You're constantly tracking prices, choosing expiration dates, managing positions. It's a full-time job. And frankly, the sheer manual effort is what buries most people who try it.
And that brings us all the way back to our real advantage. The true power here isn't about some genius AI that's smarter than a human. It's about having perfect, unemotional robotic discipline. A machine can run this complex strategy, watch the market every second, and execute flawlessly 24/7. It never gets tired, it never gets greedy, and it never gets scared. It simply automates the discipline.
So here's a thought I want to leave you with. For decades, the entire game on Wall Street has been about one thing: information. Who has it first? But maybe, just maybe, that's not the game anymore. Maybe the ultimate trading advantage isn't information. Maybe it's discipline. And if that's true, you have to ask yourself a very real question. Can an AI be more disciplined than you?